Mr. Faber, just a short introduction for our viewers. You are the editor and publisher of the Gloom, Boom and Doom report, and your forecasts have been spot on.
Not always, not always.
But I'm going to name two examples.
Yes.
Just before Black Monday, you advised clients to sell their stocks.
Yes.
So that was a good one. And then
that was by accident.
And then just recently, was it also by accident? On the 6th of March last year, you said that that was the bottom in the stock market and we should buy stocks.
Yes, I mean, I don't think the 6th of March was an accident, because at that time I had started to advise people to look at emerging markets already in November, December 2008, because they had really collapsed, and also commodity prices had collapsed. And then by March 6, 2009, a lot of technical indicators in the markets had improved. In other words, the S&P and developed markets made new lows, but the Chinese stock market didn't make new lows, and oil was already rising. The dollar was beginning to weaken, and industrial commodities had bottomed out at the end of December, and the majority of stocks had already bottomed out. So technically, the market was very oversold, but there had been some improvement in the marketplace. And when I was asked by Bloomberg, do you sell or do you buy? I said buy, because I thought the risk-reward at that time was relatively favorable for stocks.
Do you expect another banking crisis between now and a year?
Not this year. I don't think so. But I think the next 5 to 10 years. You see, we had a financial crisis. Basically, the financial system went bust. But it was bailed out by the government. The next time the train stops is when the governments go bankrupt. And that day I really look forward, when the governments go bankrupt, because that's what they deserve.
Can we just look at the equity market once more?
Yes.
Do you think that it will still recover, or is going down more likely?
Well, I think we may get a correction here, but I think in general we'll see still higher prices, especially in certain markets where you have a relatively high dividend yield. And then I also feel that interest rates will stay very low for a very long period of time on the short end. Bond market, I think there the interest rates will go up. But on the short end, the Federal Reserve will keep interest rates at zero for as far as the eye can see.
Yeah. And you said that you are not very positive on bonds at the moment, not to own them. How do you see the problems in Greece at the moment? Do you think?
Well, I mean, I think the Greek problem is a small problem in the context of the whole world. That is not a very relevant issue. But the US is Greece, 100 times bigger. Basically, they are also having or will have financial problems, especially with regard to the government debt. And in the bond market, we have to distinguish between government bonds and corporate bonds. Now, some corporate bonds, I think, are still okay, although the great values that we had a year ago, when the corporate bond market had collapsed and the spreads had widened, that is no longer available. Spreads have narrowed a lot again, but there may be a reason for that, in the sense that some corporations deserve a higher credit rating than the government, because they have a business that generates income, and so they can pay the interest on their bonds and eventually repay the bonds. I'm not sure the US government will always be able to pay the interest on its debt, and to repay the debt is out of the question. They can repay as long as they can issue new bonds. In other words, it's a Ponzi scheme. You get new investors to pay off the old ones. But eventually, interest rates the interest payments on the government debt will be so huge that they just have to print money. Then they repay in essentially worthless confettis.
Investors worry about Greece and they think that it might even fail. And now you're comparing Greece to the US. Do you think the US can fail?
Yes. But as Stiglitz pointed out, they will not fail by not paying. That is not very likely, although it could happen that they would say, we don't pay foreigners, because 50% of the government debt is owned by foreigners. So you could say, we don't pay the foreigners. That is a possibility, especially if there was an international military conflict. But the other way to default is that you pay back in money that has lost its value, like through very high inflation rates. If, say, you lend me money, and then we have very high inflation rates, then in 20 years' time I pay you back in essentially worthless money. There's no use anymore for you. So that is what the US government is most likely to do, that they print their way out of the problem, and they will not be able to eliminate the problem, but they can postpone it for a while. At the end, the problem is even bigger.
And then what will happen?
Then, usually the next station is you have very high inflation and a bad economy, like in Zimbabwe or like in Latin America in the 1980s. And then either you have a financial reform, like in Argentina, they had the Cavallo plan on the Menem, or you go to war. I think the US will go to war.
Really?
Yes.
And
now you may ask me against whom. The US has always been very good at finding some kind of an enemy somewhere.
And between when and how many years?
Well, I think the whole time frame, I would think, within the next 10 years or so.
And you think war would be
So I hope I still be alive to see this mess.